Namaskar. Welcome back to my channel. Another live on Thursday. If you're new here on this channel, first of all, my name is Aditya Soma, and on this channel, I talk about achieving financial freedom through real estate investing, and also, my journey, how I achieved financial freedom through real estate, and also market updates, Windsor market, in general, Canada market, and also about the new interest rates changes happening, and different sorts of I will answer your questions, any questions you have related to real estate, investing, selling, flipping, wholesaling, anything that can help you to achieve your financial freedom. So with that, today, in today's live, I would like to cover two important elements. One, the market update, because I was waiting for May stats for Windsor, Ontario. So now finally, the May month has ended. So we are in June. We have the stats for the whole May month. So I'm going to share that data now, and also touch a little bit on, yesterday, the Bank of Canada has increased another 50 basis points. So I'll be sharing, what I think, how it's going to impact on real estate in general. So with that, if you're joining for the first time, let me know where you're joining the live from. And if you're rejoining again, let me know how is your day going. And with that, let me just quickly share my screen here. Also, don't hesitate to ask any question while I'm doing the live, because while I'm sharing about the Windsor stats, or when I'm giving my point of view, I would love to hear from you, because it's a crazy time. We have seen a drastic difference in the market comparative to April. The May month was a huge difference. So I would like to hear from you guys. What do you think? And also, how do you think the Bank of Canada, the increasing in the 50 basis points, would impact on Canada? So let me know in the comments what your opinions on. Definitely, I'll be sharing mine as well. Hey Tarun, how are you, man? Your last week live session was awesome. Thank you. Glad to hear. Again, if you haven't joined, if you're joining for the first time, I do this lives every time. Sometimes just me alone, like talking about the monthly stats or different topics. Sometimes I bring the guest in to talk about, on mindset, talk about their journey as investors, or maybe pre-con investing, or different markets. So stay tuned for those updates. Let me share my screen here to give you some data on Windsor market first. Okay, so bear with me here. Okay, so here we go. So let me know if you can see my screen. Okay, it looks a little bit weird, so let me change the pattern here. Okay, maybe this is better. Okay, so here, if you look at the May month data for Windsor, Ontario, again, you have access to this data as well. If you go on to windsorrealestate.com monthly stats, you will be able to see. You can even look at the previous stats as well, like 2021, 2020, all those data. If you're a data nerd like me who wants to just see how the market behaving, so go in there, check out. But let me quickly run through these numbers here, because these are like overview of the whole May month. So first of all, to start with, the new listings are up by 37% comparative to last year, which is a huge thing, because the inventory before April, we were always talking that supply was low and the demand was high, which means less sellers, more buyers. Now we are seeing inventory has gone up by 37%, which means if there were 100 properties last year, now we have 137 properties, which is pretty huge increase. And also, if you look at the number of sales comparative to last month, the sales has reduced by 20%. So that means, again, the supply is increasing and the demand is decreasing. So in a very layman terms, if this happens, that means we have to see the price go down. And that's exactly what happened. The average home price r- has reduced, like comparative to last year, we are still plus, but comparative to last month, here, let me change my screen here. This screen here. Okay. Yeah. So if you look at the screen here, so last month it was 692, and now it dropped almost, let me do the math here. So 45,000, give or take 45,000 drop in the prices comparative to last month. And if you compare with the um, March month. So technically, from all these years until March, March was the peak, the highest. So comparative to March month, almost the price has decreased by like 74%, 76%. So give or take somewhere in that range, which is a pretty significant drop just for 1 month, because we were seeing the other way around. Like in December, January, February, March, we were seeing the exact same growth in the opposite side. It was increasing. So now it's decreasing because of, the major impact that I feel what happening is, the Bank of Canada is scaring everyone to saying that, they already increased the rates by 50 basis points yesterday, and they're also, saying confidently that there is a very likely chances that they're going to increase couple more times this year. So end of the year we can see the rates go up by another 1%. So which means, I was reading some surveys that, people are, the banks are doing survey on, like, how would it impact on a normal consumer, for people who already own existing real estate. They were asking people to do a survey, like, what would happen to your financial situation if the rate increased by 1% or by 50, 0.5%. So what would be, your situation there? Based on those surveys, like 19%, approximately 19% of the people said they cannot afford those homes. They cannot afford the payments, which means they have two options at that point. They fail to pay the mortgage payment. If it increases, then they go bankrupt. Rather, that's one reason I feel why inventory is increasing, because those people who cannot afford, now they are the one putting back into the market and selling. Because, if you look at actual, the numbers, this is the growth that we have, we had only just in last 3 months. So technically, if you bought a property, like, 2 years ago, 3 years ago, you're still up by very high percentage. So in specific, compared to last year, you're still up by 14% till the date, even till the date with the current numbers. But just comparative to 2 months ago, from the peak point, you're down. So that means they have still the profits that they can lock in by selling it. So that's why we are seeing the inventory going up. So let me quickly look at some questions here to hear your thoughts in here, and also let me know what do you guys think is going to happen in near future, because, right now, like, it's very unpredictable. We saw that growth just in last, from December, January, February, and March. We saw that crazy 10 to 15% increase, and now we are seeing that exact same, the opposite way. So Tarun, how to invest in US, especially in short-term rentals in Arizona, Phoenix? So Tarun, I'll be honest, like, I haven't looked into Arizona, Phoenix, or short-term rentals yet. So maybe I'll try to bring a guest if you know someone who is aggressively investing in that area. give me suggestions in the comments. I would love to invite them onto the live, so that you guys can get gain knowledge from them. Even likewise, I can gain knowledge from them as well together. So let me go on to the next question. Aditya, do you think from solid data history in Windsor near university area, is it still a big hike in price for detached 5-bedroom house roughly? So if you're referring to like still the prices that I was just referring, right? Like, so still comparative to last year, before last year, there is already the gain was there, because if you look at the last year compared to this month, compare May month from last year to this year, there is 14% increase. 14% is actually huge. It's not a normal gain. And in 2021, 2020, same thing. It was like 15% plus increase. So if you bought a property 2 years ago, you still have like 30% increase in the prices, which is a great returns, because if you look at the money you put in, so if you put 20% down, the 30% increase means you made like 150% return on your money in 2 years. That's like very high returns. Average a solid stocks like blue chip companies, the S&P 500s generally like increase by like 18 to 12, 8 to 12%. Whereas like here you're gaining like that 8 to 12% is per year. Whereas here you're seeing like 150% increase, which is like 75% per year. Again, I'm talking about on the money. Sorry if I confused you. The money written on your money, not on the price, is 75%, because you're leveraging. The cool thing with real estate, you leveraged with other people's money, which is the bank's money, right? And if you have done some force appreciation, that's even more. So again, yes, for sure, Tarun. So can we refinance a home immediately after tenant occupancy as per the BRRRR strategy? I mean, again, so you can refinance the property. Yes, of course you can. If you have enough equity in your property. Let's say you bought a home for 500,000 and currently if it's worth 700,000 now, yes, of course you can refinance. Banks, if you qualify, banks will lend you up to 80% loan to value. So yeah. Swarupa, do you know whether is it worth buying investment property in Smith Falls near Ottawa because price seems low? I'll be honest, I have no clue about that city, so I don't want to comment too much. But I would suggest, like, look at what's happening in that city. How far is it from the jobs? How is the job rate? How is the population growth? How is the vacancy rate? Is it low or high? Is the people, are there people to rent the places? Do the people have jobs, and how is the average salaries in that area or surrounding? So dig a little bit more into that neighborhood, then you will be able to make a decision whether to you know uh, know if it's worth buying in that area or not. And you also go find a local real estate focused, investor focused realtor, so who can guide you better in that neighborhood, in that area. Sorry. So hope that makes sense. Tropical Mom, I love that name. It's not good to sell, it's bad to buy too, because of the increasing interest rates. It's not too good to sell, it's bad to buy too, because of the increasing interest rates. I mean, again, it's hard to say. I kind of say that it depends on what's your personal situation is, and how much have you leveraged. Would you be able to, in order to say not to sell, let's say if you're in a good financial standing and your property is making positive cash flow, and even if 1% or 2% interest rate hikes, still you won't be able, you won't get any impact, then yeah, heck yeah. Because personally, I'm a huge believer in real estate buy and hold. So personally, I love to hold properties for 5 years, 10 years down the road, because we have seen over the long period, the real estate had made millions of people, most of the millionaires in North America. because the biggest thing that anyone who is investing in real estate is getting the leverage. Someone, the tenants are paying their mortgage down, so no matter what happens to the prices over the period, if you have a property that can sustain itself even with this 1 2 3% of interest rate increase, then yeah, then. But if you're in a situation where you have a good equity that you already gained in that property over the period, but you cannot afford, if the interest rate go up by 1% or 2%, then maybe you have to consider selling. Because again, I'm not a financial advisor here. Definitely reach out to someone professional. You can talk one on one about your specific situation. I'm just giving my opinions here. But definitely worth digging more into what is right for your situation. Sit down with a professional, analyze where you're standing financially. You know Adding that additional layer of 1% 2% rate increases on your existing mortgage, and see how it going to impact. And also depends on if you have a fixed rate, variable rate. If you have 5 years 10 years fixed already, that means your rate is not going to change, so you don't have to worry on the payment changes. So that's another point on there. So, Amit, how is the rental market in Windsor? Yeah, so rental market is pretty strong. Like, the population in Windsor is growing. The vacancy rate is pretty low. Like, I have 44 doors. None of them are vacant except the one that I'm doing renovations on. 5 units I'm doing renovations. Except those, everything is renting. Josh Tucker, please share your thoughts. Real estate investing in Sarnia, Ontario. Um, I mean, again, personally, I haven't invested in Sarnia, but Sarnia was the city that I came to Canada when I first came to Canada. I came to Sarnia. I lived there for a year. So comparative to Windsor, like if I compare Sarnia with Windsor, I personally prefer Windsor because the Sarnia population is like less than 100,000, whereas Windsor population is like close to 400,000. And the Windsor is close to the biggest city, one of the biggest city in US, the Detroit. And lots of job opportunities over there, lots of growth happening in Windsor. Comparatively, again, I, I could be right, I could be wrong. That's my point of view. That's why I stick to Windsor. But maybe if you know anyone who is investing in Sarnia, let me know. Maybe I would love to bring them as a guest and ask their thoughts on what they think. The Windsor market, where they think about the Windsor market. I mean Sarnia market. Sorry. So also just going back to this market updates, right? So if you just go over like the number of sales are down, that we were just touch based on. If someone is joining now, I was just mentioning the prices, um, also in Windsor, and I was seeing in London, Toronto also there is a huge difference. Like in Windsor it's 45,000 drop in the average price. So we were at like 692, now we are at 647. I see in London it was like 80,000. I see in Toronto it's like over 100,000. So definitely most of the majority of the Ontario cities that had a huge gain in last previous 4 months 5 months, that is coming down now. So let me stop my screen sharing here and go back to the question and answers here. Again, if you're joining for the first time, let me know what do you think about this interest rate hikes, because I was just reading this article. Here, let me add this article to the screen. Okay, no mind, not this one. Okay, here. So this is the update from yesterday. The Bank of Canada has hiked its key overnight interest rates by 50 basis points to 1.5%, and also continues to quantitatively tighten. So basically, they're saying, definitely to bring the inflation down. they think this increasing the interest rates would help. Again, it could be right, or I'm not an economist to judge on their decision. But what could happen is, like, when the interest rates are going up, the people will spend less money on consumer goods, because because of the war that is happening, and the supply chain issues. Lot of um, lot of pressure on the inflation. So the price on each and every consumer good has gone up in last couple of years, especially during this COVID time. So they want people to spend less, um, so that they can bring the inflation rate. So I think currently it's at like 6.8 as per April. They want to bring down to like 3% or 3.1, which they so basically, I was reading a lot about this, the whole the increase in the interest rate, the whole concept, because this is a whole new thing for me. I never, like, I had to look into this kind of things. But I was like, last few weeks I was just reading a lot of things about how it works in general. But to my brain, like, in simple terms, um, because now it's not because of just the interest rates are going up, more if it's because the last 2 3 years um the inflation has shoot up. Because of that, the prices has gone up crazily. So now if they increase the interest rates, they think that prices, one, definitely they want to cool down, cool down the real estate, because it was super crazy hot. So they want to cool that down, and of course they don't want to crash it. So for sure they're going to be clear. I'm pretty sure they are the economists. They understand where to stop, where not to stop. But probably I'm thinking, in next they might increase for next 1 2 or 3 times, and then try to stabilize and see, just probably from there, just to see how the market is going to continue. So from this overall reading, to put it in layman terms, I think we might be in this uncertain market where we don't know if it's going to continue to go down, or it's going to just stay where the prices are. Definitely, for sure, I don't see it's coming up for at least next year or so. But I'm predicting that in next 3 or 4 months, we should see a stable market, which means, like, the prices are not going crazy down, are not going crazy up, probably just where they are. So now, pretty much, we don't see any bidding wars anymore, and we already started to see, like, very very less bidding wars. Some of them not even getting any offers, no showings. So probably now, we as agents, now I'm putting my agent hat, where we have to say, okay, no more pricing it like lower than the market value. Just price it where the market value is, and continue to market the property, because now it's taking longer to sell than before. So probably we just continue to market the property, so they sell for what they listed for, or even sometimes negotiate a little bit, you get a discount. So kind of stable market where it's not, people can predict what's happening in the market, because right now no one can predict. That's the fear. Because of that fear, many people are holding back on buying. So again, I love to hear your thoughts, guys. This is just what I think. But let me know what your thoughts, what do you guys think. um, yeah, so let me go on to next questions here. Mohammed, I'm waiting for the time when I can get a student rental in an approximately 200,000. Wow. Um, Again, that's very, what do you call, pretty intensive goal. Because 200,000 is where, when I used to see, like, in 2018 2019, which means the prices has to drop by, like, right now, on an average in student rental area, like 500,000 on an average, give or take, for a 3 4 bedroom house or 5 bedroom house. So that means they have to drop by almost a 100 and something percentage. So which, I don't know if that would happen. But again, hey, mm, yeah, I'm curious to see if that would happen. Going on to the next question here. So if you're guys, also I have a news to announce here. So we are starting to do a workshop. So the first one is on this coming June 7th, 7 p.m. because a lot of people have been asking, how do I analyze the deal? How do I know what to do next? So many things. And also, like, how I got to make $1 million, become a millionaire at 30, because, which is a goal for many um, average, working class people like me. So in this workshop, I'm going to share how I was able to make it, because it didn't happen overnight. It's a lot of struggles and a lot of decisions to make, a lot of things to consider, lot of commitment, discipline. So in this workshop, I'll be giving my journey, how, like, very detailed in step by step. And also I'll be analyzing some deals, live deals that are on the market with you guys, to give you an idea how I analyze the cash flow. Because that's another thing many people have asked me, like, how to analyze a deal, especially if you're just starting out, you own one property or you don't own anything. This workshop is going to help you immensely. And also, we at the end we'll do Q&A. So you'll be getting a chance to ask questions, and I'll answer them, um, again, to my best possible way. And also we'll give away, actually, um, me and my team, we came up with, I put down the whole journey of mine, going from 100,000 debt to making over 1 million. So I put down that in a book, a small 25 pages book. So it's a PDF book. So I'm going to give away for free for those who attend the workshop. So make sure you attend. And also, along with that, I'll be giving away a calculator that I use, Excel sheet that I use to calculate cash flow. So make sure to attend, or else you're going to miss out on those. And then it's going to be a lot of fun, and love to know you guys, because here I cannot see your faces. Here I cannot take your verbal answers. Whereas on the Zoom, on the workshop, I can see your faces. I love to see your faces. So I'll put the link in the description, in the also in the comments. So make sure to join there. So you will get an invitation. You'll get an email with the timing and everything. So it's on June 7th, 7 p.m. So looking forward to see you everyone there. Okay, so going back to the questions here. Can you suggest a real estate investor in London? Real estate investor focused realtor, you mean? I have a good friend of mine. His name is Jeff Weibo. He has a YouTube channel too. Search for Jeff Weibo. He started as a pretty much like investing in single family, duplex, triplex, just like me. Now investing in like 20 unit, 30 unit apartment buildings. Also a realtor. I think he has a team. So I'm not sure. Don't quote on me that on the real estate side. I don't know if he's still active on the sales. But definitely a solid guy to follow to learn more about London real estate. So check out his channel. Going on to the next question here. Tarun, as long as the gas, shelter, and groceries doesn't become very expensive and deflation doesn't hit the current base point, increase is all right, I think. Yeah, that's a good point. That's very true. I think I agree on that, Tarun. Yeah, to some extent, because yes, we've been spending quite a lot. We gotta bring down our actually, that's a good point that Tarun brings up, like, where my suggestions for anyone who is looking at this, one thing is, don't be scared. Second thing is, be prepared and plan yourself, which means the important key point right now is make sure take time mm, to download your last 12 months expense, your credit card bills, all your expense sheet, put it into an Excel sheet, check it out how much you're spending, because that's a very key in my opinion. Because now with this interest rates and with the things, when everything is going up in price and the interest rates increasing, you need to know where you're standing, how much you're spending a month. If you don't know, then you can get into trouble with these increases, right? So take time to put down how much you're spending every month and analyze, sit down with your, if you are married and have a family, sit down with your family, like with your spouse, um, and see what you can eliminate, what are the things you can bring down. For example, if you have two cars, maybe reconsider, see, hey, do you really need two cars? Can we cut down on one? Because the gas prices are going up, like that's from dollar to $2. It's crazy, right? um, and any other expenses, like are you living in a rental place? Like if you're, how much rent are you paying? Can you reduce your living cost a little bit to have a freedom, right? Like that's what I call freedom, where if you know how much you're spending, and you know that for sure, no matter what happens to economy or to the interest rates, you can still be on a safe side. That's what freedom, in my opinion. So evaluate your expenses, see where you can reduce, where you can eliminate, so you can stay in a comfort zone where you don't have to worry about the basic living. So then now you can focus on your passion, or on things that you're focusing on, any projects that you are. So moving on to the next question. So, Tarun, what's your biggest secret to own 44 doors, or very important advice to own this much big empire? So, first of all, thank you. I don't think it's a big empire in a big grand scheme of scale. I would say just going from 0 to 44 is definitely a good size um, mm, portfolio for someone like me. Going from 100,000 debt. One thing is definitely being committed to it and staying focused. Very crucial, played a very crucial role. Like I'm committed because I believed in real estate, and I committed myself, like completely with a focus, narrow focus. I'm most of the decision that I'm making is around real estate. Like, hey, do I need to buy let's say $1 million home for living, rather, instead of like having this big debt, now it will allow me stop from investing. So I didn't make that decision. I always lived under my means, and I continue to invest. Like even till the date, I always have negative balances in my account because I'm always investing on something. Just like few days ago, there was a pre-construction project came up in Calgary. I invested along with my some of our clients and myself. We invested because personally I like to continue to invest, because I believe, like I read a lot of books. Now I don't remember to refer one specific book, but like one thing is, this story that helped me focus on keep on investing is, I wish I remember the author name, but I'll tell the story. That's a very that made a huge impact on my journey. So he says, like let's say I give you a sheep, which you can cut it and eat for 1 week, but I'll give you two sheeps. One, two of them pretty much like stay hunger for 1 week, try to eat whatever, and let these two sheeps make another sheep, like produce a baby. Still don't eat the baby, just continue to eat something random that you can find, but let the sheep make another baby, and use that babies to produce more babies. So he says that, like you have to create a huge group of sheeps now, then start eating. Until then, don't eat, because once you have like a group of like 50 100 sheeps, now no matter, even if you eat one for whole week, you have some sheeps already producing in that 1 week, another sheep will be produced, so that means you will never run out of food. So that story, like, I was so connected to it because that makes a lot of sense. If I applied same thing in the real estate, like, I have two rental properties now. Instead of going, oh, I have two rental properties producing $1,000, let me spend this $1,000 on buy a Lambo or buy a Ferrari. Now, my expenses went up by $1,000, even though I have $1,000 cash flow, but I have $1,000 expense added to my lifestyle. So now I cannot do anything. I just cut my baby sheep and I ate it. So now there is only two sheep left. So that I have to wait until they produce another one. Whereas if I have this cash flow, I'm collecting that cash flow, adding up, and now buy another rental property, doing same thing, continue to live under the means, continue to buy more rentals. So that's a great question. I love that. So that was my secret in, I think. Yeah, moving on to the next question here. How rent to own market is. Spike Bliss, interesting name. So in general, like, it's not like a specific market to say how it is, right? Like, in general, like, if you're in a situation where you cannot qualify, like, I'm talking about, like, you have two things to look at. Market is in general, like, whatever the real estate market situation is. But in general, like, mm, to find, like, if you're looking at rent to own as an investor or has a consumer who is going to buy that rent to own property. So let's talk from two different points. For people who don't understand, or for people who don't know what is rent to own, let me explain that and I'll try to tackle on both. So um, if you're a renter and for some reason you don't have enough down payment or you don't have enough credit, for some reason you cannot buy a property today, but your landlord have offered you that, hey, I will have an agreement with you saying that you will be buying this property after 1 year or 2 years or 3 years, whenever you qualify. But it's on the specific on the agreement, like, let's say 2 years down the road, for X price. So he adds, like, 5% or 10% appreciation on the market, whatever the increase that he wants to put in. So they put that. So for example, the current price is 500,000. He says in the agreement, like, okay, I will sell you this home for 550 2 years down the road. Until then, you pay me X amount of rent. So um, it's advantage for both. For investor, he locked in the returns, so he knows what price he's getting at the end. And number two, he's sold the property for the tenant indirectly. So that means mostly the tenant is going to keep the place clean because he knows that by end of second year, once he qualify, he is going to buy that property. So for the tenant side, he cannot qualify now. At least instead of paying his mortgage, he's paying the rent, and someone paying their own mortgage, some landlord. Now he is paying the rent but paying his mortgage down. So at least he's taking opportunity to save up for the down payment, and he already locked in the price. So again, there are advantages and disadvantages on both the sides. But in the current time situation, maybe finding the finding the tenants who are willing to do for that fixed rate might be challenging, because there is a little bit of fear in the market that prices can go down or stay stabilized, stay stagnated at some point in coming future. So for that reason, maybe it is a little bit harder to find the consumers. But if you can, good thing is for you as an investor, it's good, you can lock up your returns. So that's my take in there. If anyone have any thoughts, let me know in the comments. Love to hear your thoughts on that. Moving on to the next question here. Tropical Mom again. We refinanced our first home in December 2020 for 500K and bought another house in February 2021. Now we will rent out the first house of all and we will move into the new one. That's fantastic. So if you already refinanced and you got another home, and if the first home is making positive cash flow, then you're fine. That's how the leverage works, right? Like over the period, those renters will pay your 500,000 mortgage in 20 years down the road, 25 years down the road. Congratulations on that. Based on your expertise, Aditya, can we refinance again? So it depends on refinancing is purely depending on what's your property value now and how much equity do you have, because those two terms are very important. I would suggest, like, doesn't hurt to go talk to your mortgage person. But one thing I'll be careful is like, hey, if you're refinancing and you're leveraging more, you're taking on more debt, right? Are you, in this time period, I would definitely like would suggest do a refinance, especially if it's a primary home. Maybe put it on a HELOC, so you don't have to pay the interest. Yes, you have a higher interest, but you don't have to pay on the HELOC. You don't have to pay the interest until you use that money. So but having access to the funds will allow you, what if, because we have seen 20%, almost 10 to 20% decrease in the prices in last 2 months. So what if it decreases another 10% or 15%? Now, hey, maybe, because this is the time where many investors have been waiting for. Many people, many buyers, are waiting for this situation, because now when the inventory is more, you can find motivated sellers. More motivated sellers you can find a killer deals. So this is the time where you can get good deals. So when you get a good deal, you can jump on it because you have access to funds. So I would suggest, but just make sure you're not over leveraging yourself. You're not getting into trouble, because I cannot tell that side of story based without knowing your full financial situation. So I would suggest sit down with a mortgage person, look at all the sites, see which makes sense to your personal situation. Hope that is helpful. And moving on to the next question here. I'm waiting for the time when I can get a student rental. Oh, I think I answered this question. I wish you the best, bro. I don't know. I cannot talk on that much. Rob, inflation rates never drop quickly. So we are so far behind. Even if we reach 3% by end of the year, we will still be above 7% inflation. Yeah, that's true. I think the inflation will take time to. So it's I think that the Bank of Canada should have started increasing year and a half ago, instead of this crazy increases all at once, scaring people, from by with their actions. Because if you look at practically the interest rate we are at right now, it's actually this pretty much the same interest rates that we are at before pandemic. So technically we were in this situation already with the interest rates. So it's not the interest rates that's scaring people, it's the speed that they're increasing. That's what's scaring the people. So again, yeah, I agree. It's just a temporary. It's kind of a bandit they're putting on the wound, which it can get worse. So we don't know. I have to wait and see what's going to happen. But love the thought process there. So moving on to the next comment here. Remember, our CPI number is all a lie and fabricated. Yeah, that's true. The more I read, that's what I'm coming to conclusion at. So it's interesting. They did not care if a housing crash happens, only that people can pay on their loans. That's a tough one. That could be a tough one if they don't care, because that's going to put a lot of people um, in trouble. So again, the, this is something like need a deep researcher. If you know someone who is really good with this analysis, please let me know names in the comments. I would love to bring on them as a guest and ask these questions more and more, because even I'm curious to learn more about this scenario. Because as an investor, one thing I believe in, no matter what the market scenario is, if we learn how to do it right, we can grab opportunities in especially in downward market. But again, if you know anyone who is an economist, who has a great deep knowledge in this subject matters, please suggest me those people. I would love to interview them, get them on the show, ask more questions so you guys can learn and I can learn as well. Moving on to the next question, I think we answered on that one with a little story there. I think we are done with this one as well. Moving on to the next. Yep, we are done with that one too. I think for some reason, let me see here questions. There were a lot more questions that I haven't answered. Yep, that we already talked about it. The London market. Arfuddin will join your workshop. Yes, if you're joining just now, if you haven't heard what I said about the workshop, um, I am conducting a workshop on Zoom, so virtual. You don't have to drive anywhere. And on 7th, 7 p.m. This is a 1.5 hour to 2 hours workshop where I'm going to share my journey on how I went from 100,000 debt to $1 million uh, plus equity and in making $1 million plus. So on top of it, I have some good live deals that I want to analyze with you, because a lot of people have been asking me how to analyze the deals, how to analyze cash flow, and also at the end I'll be giving away the first book I'm writing down. So I wrote already. It's a just a small cute PDF, which but very detailed, especially if you're a if you're new to this real estate, you want to know, you want to achieve financial freedom, and you haven't invested, or you have invested one or two, but you love to achieve the financial freedom. Then this book is something that give you a very detailed, like step by step plan, because that was the plan that I made for myself and I executed, which allowed me to achieve my financial freedom. So again, we'll give away that PDF, and also a calculator for how to calculate cash flow in a very layman terms, very simple calculator that I use every day pretty much. So don't miss out that workshop. The link is in the description, and link is also in the comments. It's on June 7th, 7 p.m. So looking forward to see you there. And also at the end I'll be answering questions, so I can see you guys. So basically with the Zoom, cool thing, not unlike YouTube, I cannot see you guys, but in Zoom, the workshops, a cool thing is I can see you guys, so I can see, you can talk to me. And I'll be answering your questions at the end. For last half an hour, 45 minutes, we'll be talking one on one. So, and at the end I would like to get the feedback, and maybe we'll continue to do that once in 2 months, once in a week, or whatever, however, based on the timeline, we'll see. So make sure to check out. Moving on to the next question here. Arun, I got my first home in GTA a year ago for 750,000, and now it's 1.1. I'm looking to invest further in Windsor or London with a HELOC of 250. Is it better to invest on pre-construction project or rental homes? So, very good question, Arun. So, if I were you, first of all, so it depends on your financial situation, because I want to know, because you're already leveraging pretty heavy on your primary home, because 700,000 to 1.1 and 80% on even $1 million is 800,000. So that means if it's your primary home, you have 800,000 mortgage. So you want to make sure you have the right, you know, um, amount, you have enough funds to make sure you don't get into trouble with the interest rate increase. So that's number one. Number two, you have access to 250,000, which is great. So again, both pre-construction have their own advantages. I'm an investor on both. I love rentals, I love pre-constructions. So basically, it depends on your personal interest and the time that you can put into. So resale, the advantage is with the current market situation, because there is motivated sellers out there, like I don't know if you joined in the beginning of the live. I was telling, there's chances that there will be more inventory coming in next month or 2 or 3. So there will be because right now we already have in 37% increase in the number of listings on the market, which means that the inventory is increasing. So indirectly, which means you have opportunity to buy something for discounted prices, because before you got to be very creative to find a good deal that make it a cash flow. But now you can find a good deal in terms of price. So which means you can negotiate. If you become a good negotiator, if you find good people to help you to negotiate, because this is the time you can see some motivated sellers and negotiate deals. Of course, if you come across 10 deals, maybe 7 sellers might not be interested in negotiating with you. Before, out of 100, maybe 1 or 2 sellers are interested to negotiate with you. But now, out of 10, 2 or 3 sellers are willing to negotiate with you, or give a discounted price because they have some other commitments, because of this situation. So which means, long story short, you can get some negotiate good deals. And that being said, with the resale, you have to put some time and energy into it, because now you're going to have mortgage. So you want to make sure you get mortgage, you qualify for mortgage, and you have to find tenants. You have some work to do. You have to find a deal. And so if you're willing to put the time and energy, maybe do 1 or 2 deals on the resale side. But if you don't have time, if you don't have, like, for now, the time commitment, or enough resources to put towards resale, pre-construction is a pretty easy one. If you can find a good pre-construction opportunity, you can just put your money and let the money work for you, um, over the period. Again, personally, if it's a pre-construction, I like to go for like a longer closing, because in a short run, for next few months, we can see certain fluctuations in the prices. So in a long run, over 5 years, maybe if it's a condo, or like, that is closing 2 years, 3 years, or maybe even 4 years, 5 years down the road, then you just wait and see. At the end, you have a brand new product coming in, where you can place it. If it's in a good location, that's one thing I want to make sure is pre-construction. I'll go for like good builder and good location. Then you don't have to worry until you have a mortgage. Until then, you don't have to worry about the tenants. You don't have to worry about the any mortgage payments. Just you put your money and waiting for the turnover. So yeah, I mean, both have their own advantages. I would suggest make a decision based on your personal circumstances, or if possible, put some money towards pre-construction, some money towards resale. Moving on to the next one. In this work from home concept of world, can I try 5% down on my second home with the logical reasoning of leaving the first home? Yeah, of course. Only thing is, no one knows that you are, whether you're renting or not. You have to tell your mortgage agent the same story. And if you have the work from home option, if you genuinely have work from home option, and if you're genuinely moving to do a house hacking, yes, of course. But the story has to be, authentic. The CMHC or any Genworth or any insurance company, the insurance, not the home insurance, the insurance for the mortgage, they have to be convinced in order for you to get the 5% down option. So that depends on the story you give to your mortgage person, and the way the mortgage person present it to the lender and the insurance company. So you can try. I don't but again, I'm not a professional financial advisor or anything to advise you on that part. And don't even tell anyone that I said it's a possibility. So it's your risk, you're taking that chance. Moving on to the next question here. I tried that rent to own before, but the rent is always higher. It's not easy to qualify to. Yep. Um, yeah, if you're like, from a rental point of view, yes, you're paying premium rent, because for the homeowner, the investor who is doing that, he's making his money both on the rent and also on locking up the X price. So yeah, I mean, I would not say it doesn't work. I would say you got to look into the numbers, and especially if you're a renter looking to do own the house, actually it does come in handy for some people. Like I have a friend, actually I'm listing their property now. This friend's like 3 years ago, there was a homeowner, he's moving to states, and he offered them rent to own option because they don't want to sell at that point. So they offered my friends rent to own option because my friends, they were on work permit status, they couldn't get a mortgage, they were just still new to the country, their work was just started to happen. So for them, they got for decent price, with the circumstances the market was in, like within just now, like even with this 10% drop in the prices, still they will be making like, after they got qualified after 1.5 year for the mortgage, so they purchased the property after 1.5 year. Now, because they locked in the price when they bought it, so the appreciation that happened and the mortgage they paid down, now they're making pretty good return on their money because they logged in at the right time. So it does work for some scenarios, it doesn't for some other scenarios. So you gotta deep a little bit more into your personal financial situation. Wow, it's already 8 o'clock. I cannot believe. uh, Teddy, is it still a good time to buy in Windsor now? So, again, I strongly believe in the Windsor is a nice up and coming city because of a lot of activities happening. Because now is there is even better time than, because then 2 months ago, 3 months ago, everyone was like scared to find deals. Um, Everyone was like dying to find a good deal because everything was going up, and now you can negotiate good deals, like you can get good prices. So if the market is down by 10%, if you get 20% off, even if the market goes down by 20 or even 30, at least you locked in for a good price. So um, and with the low vacancy rate, the population growth, and the employment opportunity growth happening around Windsor and also in Detroit, because I talk a lot about Detroit and in the impact that is having on Windsor, because I have seen personally how many people in my own community, like Indian community, where people moved from states and they're still working for states. And also I have seen from people like truckers coming from Brampton and different cities living in Windsor there, because they don't have any reason to live there, but have a nice home here for a pretty reasonable price, but have the same income salary because they're on the go, or they have a work from home option. So all these things, considering all these things, I strongly believe still Windsor has a lot more potential to grow. So it's a city that is in work in progress, in my opinion. So it looks like it's already 8. So I'll take one final question here. Sagar, hi Aditya, namaskaram, namaskar. Are there any good bird student rental properties that are available near University of Windsor? Yes, we have some really good deals currently, and also some more deals in the pipeline that are coming. So I was just mentioning, like we have a workshop coming. It's on 7th, 7 p.m., where I will be sharing the live deals, analyzing with you guys, and also sharing my journey and all those things. So make sure to click that link. So Sagar, I'll put our email address and phone number. Make sure to reach out to us. We'll share those details with you guys, because it's already 8. I cannot believe I promised my wife to take her out today. Um, so yeah, make sure to check out the workshop, because it's time for me to see you guys in your faces, to put you face for your name. And this is the first time I'm doing a workshop. So, and also will be giving away a cute PDF that I written, my story, my journey on how I went from 100,000 debts to making a million over a year. um, and the investing journey on it's in a step-by-step process so that you can do the same thing. So I'll be giving away that PDF for those who attend the workshop. So make sure click the link in the description or in the comments. We'll see you there. And looks like there is a one big final question that I would like to answer here. Silva question: I'm looking to make an additional income accommodating my garage to rent. Should I work it as an ADU or tiny house, or just extend my the main house? Which one is less painful? So it depends on. I would suggest find a good contractor or someone who has done any investor in your area. Ask them to walk the property with you, because sometimes you can, because I cannot say by just looking your text. It's really tough. If I would give you just one answer, I would be the dumb one, because there are many factors goes into. There are scenarios where I have done just the upper floor into a unit with less painful. There are scenarios where I went through the painful process and did a detached ADU in the backyard by taking the garage down. There are scenarios where I added basement in unit in the basement because of the height. The height was good enough. So I would suggest walk with a contractor, someone who has done this ADUs, and a good contractor, because they can see what's possible. Or find a good architect who has done ADUs. Ask them to walk the property with you and give those ideas, because they are the right one to, so find the right person to help you. Awesome. So that's pretty much it for today. Guys, it's already 8:03. If I didn't answer your questions, I'm extremely sorry. But again, like I said, join the workshop that we are conducting on June 7th, 7 p.m. So I'm looking forward to see you there. And with that, have a good night. Take care.